Imagine waking up to find that the US dollar has plummeted to its lowest level in years, shaken global markets, shattered investor confidence. Just months ago, it was soaring high, buoyed by optimism around the US economy and President Trump's aggressive trade policies. But now, those same policies are being blamed for a dramatic downturn. This isn't fiction. This is the financial reality of April 2025. The rise before the fall. Back in late 2024, the dollar was on a winning streak. Investors were betting big on Trump's promises, tax cuts and deregulation. The dollar index, which tracks the strength of the dollar against a basket of major currencies, by January 2025, it peaked at a 3-year high. There were 3 big reasons. 1. Inflation expectations. Investors expected that tax cuts and tariffs would drive up inflation. That would force the Federal Reserve to raise interest rates, making the dollar more attractive. 2. Trade war advantage. There was a belief that Trump's tariffs would hurt other economies more than America, so the dollar gained strength because when other currencies fall, the dollar often rises. 3. Business optimism. America's business community was buzzing. Deregulation promised faster growth. It looked like a win-win until it wasn't. The sudden decline. By March 2025, the cracks begin to show. Trump's trade policies, once seen as strategic, started looking erratic. Markets got spooked. Confidence plunged. The dollar index began to slide. By April, it had fallen nearly 10% from its January high. Meanwhile, the euro surged to $1.14, its highest since 2022, a complete reversal. So what triggered this sell-off? It was the unpredictability of Trump's tariffs. One day, a massive 245% tariff on Chinese goods. The next, a sudden rollback. This inconsistency eroded trust, and the result was a double sell-off, the dollar and US government bonds. In just 1 week, the 10-year Treasury yield jumped from 4% to 4.5%. That's a huge spike in bond market terms, and a big warning sign. Global repercussions. This wasn't just a domestic issue. The World Trade Organization reported an 81% drop in US-China merchandise trade. Let that sink in. 81%. Analysts now warn we could be entering a global decoupling, a permanent shift away from the integrated world economy we've known for decades. The WTO has even slashed its global trade forecast for 2025 from plus 3% growth to just 0.2%. That's not just a slowdown, that's a potential stall out. Domestic challenges, back home, things aren't looking any better. As of March 2025, US inflation was at 2.4%. Manageable for now, but with the dollar weakening and import prices rising, inflation could spiral. That's bad news for every American household. The Federal Reserve is now in a tight spot. Raise interest rates to fight inflation and risk choking the economy. Keep them low and risk runaway prices. Meanwhile, the Congressional Budget Office has issued a stark warning. The U.S. is on track to add $5.8 trillion in debt over the next decade. That raises the risk of a full-blown debt crisis. The bigger picture. This isn't just about a weak dollar. It's about trust in America's economic policy, its currency, and its future. Some compare this moment to the Liz Truss debacle in the UK, when massive borrowing promises collapsed the British pound and forced emergency intervention by the Bank of England. Now imagine that, but with the world's reserve currency. Final thought. The dollar's decline is more than just a currency issue. It's a warning light, signaling deeper problems in the world's largest economy. So here's the big question. Can the US navigate this economic storm, or are we witnessing the beginning of a much larger financial crisis? What do you think about the current economic situation? Drop your thoughts in the comments.